webinar today. Before we start, I hope you all can hear me clearly. Okay, can I see, if you can hear me clearly, can put a 1 in the chat. Yeah. Okay, thank you very much. Thank you, Lim. Thank you, Hua Sun Lao. Okay. Right, okay. Thank you. Okay, thank you very much. Yep. Okay, so let's start. Okay, today we will embark a journey to explore what exactly is CFD. So how do you trade CFD and why should you trade CFD? Okay, now. Okay, here are some disclaimer before we start, and all the content here are only for educational purposes only. So please consult your TR or remiser if you wish to have some advice. Okay, now here. Here we have different categories that are invested in different proportions into US stock, foreign stock, bond, and short-term investment. Okay, so please put in the chat which category you are in now, whether you are more conservative, balanced, growth, or aggressive growth. Yeah, you can put in the chat which one you are, which category you are in. So most likely those younger ones might put growth or aggressive growth. Balance, okay, Michael? Anyone else? For me, myself would be more towards growth. Yeah. But how about anyone else? Oh, balance as well. Huh, okay. So would be more risk conservative, I guess. Okay, right. Okay, so as we know that actually most of us are bullish in the longer term, that's why most of us will be buying and holding our shares for more than 5 years. Okay, for those who are balanced, and be it stocks, bonds, futures, and actually many people buy and forget about it. So let's say, for example, a doctor who buys stocks. So which sector of stocks do you think that a doctor would most likely buy in? Whether it's technology, banking, or healthcare? Anyone take a guess? Whether it's technology, banking, or healthcare. For a doctor, though, okay, bank. Name anyone else? Some people might say healthcare, Michael, right? Healthcare. Right. Majority says healthcare. Yes, you are right. Exactly. So a doctor would most likely buy healthcare stocks. Why? Because most of us will be familiar with the industry that we're working in, which means that everyone actually has an edge depending on which industry that they're working. Okay. In some instances, the doctor might know actually how does the share price react to certain micro or macro news for a certain stock counter. Okay, but if you're invested in the long term, you can't just sell now just because you think that just because the doctor thinks that okay maybe a certain healthcare stock will drop for a few weeks then rise again, right? You can't kind of like exit and enter the market. I mean you can, but it's actually hard because you might lose out on the long term. Okay, so a lot of people don't actually know how to put their short-term views into play. So what is the solution to this? Yes, CFD. So CFD can actually provide this flexibility for you to actually put your short-term views into play. Okay, now let's move on to the contents for today, which is about CFD, and then we'll go through the mechanisms to calculate the P&L, type of asset classes in CFD, and then how do you trade and what do you trade with us. Okay, so here the overall key message is the CFD has the flexibility you need for your portfolio, and then CFD is also able to help you achieve your financial goal. Okay, so as we know that in trading or investment, most of our goal is to have higher profits every day, right? Okay, now let's get started. What exactly is CFD? Okay, so CFD it is actually a derivative product where the product's value dependent on an underlying asset. So for example, stocks, commodities, currencies, or market indices. Okay, so it is also a contractual agreement where it is a contract between a buyer and a seller. So technically the traders actually pays the difference in price when it opens and close the contract. Okay, so CFD, it is solely over the counter product and it it is not listed on any exchanges. So it means that to buy or sell a CFD contract, you can only trade via a broker. Okay, so for CFD, there's no ownership of the underlying. It only provides you the exposure of the underlying, means that you do not own the underlying share or commodity. Okay, so let's say, for example, you buy 100 Apple CFD contracts. Okay, so it is actually just a contract between you and the broker, and you do not own any underlying of the Apple share. So which means that you do not have the right to vote during AGM. Okay, but actually for CFD, we do have, let's say if certain counters have corporate actions, it depends on the broker whether they would actually do it for you, whether they actually exercise the corporate actions and not or not lah. Yeah. So let's say, for example, the easiest thing is dividend. Yes, so CFD contracts do pay dividends as well. Okay. So let's explore how CFD works, which is how to calculate the P&L. Okay, so first, the golden rule is the basic of buying and selling CFD works similarly to stocks, where the golden rule is to buy at ask and sell at bid. So the spread is actually the difference between the bid and ask, which is how we use to quote the bid and ask price in equities as well. Okay, so let me show you. This is the order ticket that we have from our most popular platform, which is the Poems platform. So how do you read this order ticket? For this particular counter, we have OCBC Bank. So this CFD counter actually tracks the underlying share price of the OCBC. So it means that when you buy this CFD OCBC Bank, let's say 100, right? You buy bid at the bid price or the ask price when you buy this 100 OCBC CFD contract. So can anyone say whether if you are actually buying at ask or buying at bid? Yes, correct. Michael asked price. Okay, so for your question, we will actually answer it right at the end of the webinar. Okay, so I'll reply to your question later on. Okay, so let's continue first. So yes, you actually buy at the ask price. You do not own any underlying share. You just got an exposure to OCBC. Okay, so now the difference comes in when you trade CFD as compared to stocks. So as you can see here, there's this called margin requirement. So this margin requirement is at 10%. So it's actually the percentage of capital required to hold this position and to maintain this position, which is at 10%. So this means that you actually need to have at least 175 Sing dollar in your CFD account to hold this 100 OCBC CFD position. Okay? Now, so how do we calculate the P&L for CFD indices? So right here, we have the actually S&P index USD1 CFD contract. Okay, so what do I mean by the index point USD1? So let's say, for example, here, right, if you long S&P 500 index, the price initially at 37K. Index point is at USD1. So what does this index point mean? So this means that 1 point movement is actually worth that $1. Okay, so 1 point movement in this S&P 500 index is worth $1. Okay, so the quantity for lot is 1 CFD contract. So I'm buying one CFD contract of this S&P 500. Okay, so the margin requirement here is at 5%. So for the S&P 500 is 5%. So you use the 37K, you times index per point, and then you times the quantity, times the margin requirement as well, and times the quantity, which is 1 now. Okay, so you need around 2,480 Sing dollar in order for you to open this long S&P 500 index. Okay, so let's say, for example, in the future, the price has risen to 38,000. So to calculate the profit is you use the index 38,000, you minus 37, the initial one, and you times index per point, and you times the margin requirement. So in total, you actually earn 67 Sing dollar. Okay, approximately lah. Okay, whereas this for short S&P 500 index, similarly, at T0, you actually short at 37,600. So short means that you actually expect the S&P 500 index price to go down. So that's why you short. So after you short, which means that you expect the price to go down, but the price at T1, it was 38K. So 38K means that the price has risen instead. Okay, so if the price has rise, but you expect it to fall, means that you are losing. Okay, so at this position, with the short position, you are losing. So you use 37,600, the initial one, you minus the 38K at the price T1, and then you times the index per point and you times the margin as well, which is 5% similarly. Okay, so here you will be losing 27 Sing dollar. Okay, so this is the calculation that you will be doing for the index. So do note that this everything actually exclude commission, finance charge, and debit interest lah. Okay. Okay, so on a side note, right, here left-hand side, we have the snapshot of an order ticket on our Poems platform, where on the right side is our CFD live chart on Poem. So the live chart, we have 1 hour, we have 1 day, 1 hour, 30 minutes, and 1 minute and 5 minutes chart. So this is actually a 1 minute chart here. Okay, so on our live chart on Poems actually shows the mid price and not the bid or ask price. So what do I mean by that? So the mid actually the average of the bid and ask price quoted on our platform. Okay, so let's say for example here the mid price is ask price plus bid price divided by 2, and the mid price, which is we take the calculations of for bid and ask and then we divide by 2, equivalent to the mid price. So this one is bid plus ask divided by 2 is equal to the mid price, which is shown on our 1 minute CFD chart on Poems. Okay, so here as we know that the close is 4868.775. So this one we take it as a snapshot or point in time lah. Okay, we just ignore the fact that it's a closing price or something. Then we use an example. So let's say for example, you submitted your limit order buy at 4868.8 limit order. Do you think should the order be done? So I'll do one example, and the next one you will need to do and put in the chat, and then we see whether it's correct or not. Okay, so the first one would be no, the order shouldn't be done because the ask price at this point of time is 4869. Means that you can only buy at 4869. If you submit your limit order at 4868.8, which means that you will be queuing to actually buy at 4868.8. Okay, so next time you do not look at the mid price, because this mid price is just an estimation of what the CFD price is at that point of time. Okay, so second example, so what if you submit the limit order at 4869 limit order? Would the order be done? Yeah, you can put in the chat if the order be done, just put a yes or a no. Yeah. Maybe you might need some time to think about it. So we give around like maybe 1 or 2 minutes. Can anyone give a guess whether yes or no, the order would be done or not for the second example, 4869 limit order, if you submit 4869 limit order? And at this point of time, this is the bid and ask price. Okay, thank you, Lau. Yes, any other people would like to give other guesses? Okay, thanks, Michael. Okay, yeah. So yes, most of you are correct. Yes. Wait. Yes. So most of you are correct. The order should be done because why? When you submit buy, we buy at ask price, correct? 4869. Yeah. So this limit order would be done at this point of time because you submitted at 4869. So it will be bought at the ask price. Okay, seems like all of you get the idea. Correct. Okay, let's proceed and see what asset classes we have in CFD. So we have 4 different types of asset classes in CFD. So we have CFD equities or ETF, CFD indices, FX CFD, and commodities CFD. Okay, for equities CFD, we have around 5,000 plus counters over many exchanges lah. So for US, Hong Kong, Malaysia. So you can actually open a CFD account and see what are the different exchanges that you're interested to trade. Okay, so for indices, we have 19 indices ranging from US to China to Hong Kong and Singapore and so on. Whereas for FX, currently we have 39. So we have those major FX pairs, USD Japan Yen, on minor and some exotic pairs. So those who are interested in trading those exotic pairs, you can actually call in to see whether in the future we can offer to you as well. Okay, for commodities wise, we have 7 commodities here counters, which range from precious metal like gold and then to oil. So I'll go into in-depth later on for all of these. So first thing first, we have CFD equities. So here we have diverse market access to over 8 global stock exchanges here. As you can see here on the right, what are different counters that we have. So we also have various sectors, various CFD counters in different sectors and industries. So technically you can get exposure ranging from technology to pharmaceutical companies. So you can actually build a portfolio without the constraints of traditional ownership like in stocks and everything. So CFD equities is actually well suited for short-term trading strategies, including day trading and also swing trading, because of the ability to capitalize on the short-term price fluctuation, constraint of the traditional ownership. So this one actually aligns with quite a lot of preferences of the active traders that we have with us now. For equities, we have different icons on our Poems platform. So how do you identify which one is our CFD equities? And you need to be familiar with the symbols that we use on our Poems 2.0. Okay, here are a few symbols that we have: CFD, CFD DMA, and EQ. So CFD means the normal one, which is the contract for difference, where we have CFD DMA. So DMA stands for direct market access. EQ is the normal one, which is equities, the normal stock . Okay, so now let's get into the part where we differentiate what is CFD and CFD DMA. So in layman terms, technically, a CFD order may or may not pass through a broker, but a CFD order, a CFD DMA order would actually be sent direct to the exchange. As you can see here on the left, the chart here. So technically CFD, right? Once your order, you choose the CFD icon and then you send an order to us. So your order might or might not go through the exchange, because we might actually match your order within our market with our market makers or with other clients as well. So this is how we actually match in within our system, and then when your order is actually filled based on bid or ask price, then it will be reflected in your order status. Okay, so this is just CFD. Where for CFD DMA, 100% that your CFD order would actually send into the order stock exchange. So this one would actually allow you to see the order book, which is the bid and offer at different price level. So it's technically allow you to see the market depth . So once your order is being done on the exchange, and then it would be sent to the order status will actually reflect in your order status. So we will actually notify you that your order has been done or something. Okay, so this is how it is. So technically, CFD DMA allows you to participate in the order book of the exchange, more liquidity. So you will actually experience a more transparent and efficient trading environment. Okay, and access to real-time market depth, with which I've told you just now. So you can see bid and ask price at different price level. Okay, so you can also access to you can also have a fast execution of orders because of the liquidity that they provide on the exchange as well. Okay, so order execution for DMA orders are basically based on a last done price. So last done price, which means that it's actually price or time priority in this case. Okay. Okay, so for commodity CFD, now you can actually get access to the top 3 most traded commodities: gold, silver, and oil. Okay, so for this one, you do not have any expiry and it will auto roll over for the next month. Margin can be as low as 20%. We offer standard and mini lot contracts for all this, which is $1 USD and $100. Yeah, whereas for silver, there's only 50 . Okay, so as you can see here, for gold, UK and US, we have all the standard and the mini lot contracts, except for silver . Okay, now, whereas for CFD indices, so indices and commodities, we all actually offer different multiple size contract. Okay, let me explain what CFD indices was. So indices is similarly to the normal indices that you have, which is it represents a value of specific group of companies. where it actually reflects the performance for a particular market or sector. As you can see on the left-hand side, the S&P visualization of the company's performance. So we have all the different sectors there. Okay, so here CFD indices, we also offer multiple size contract because it actually gives you leverage and it helps you to actually provide to enhance the exposure to the index movement. So as you can see here, for example, the Hong Kong index, $1 and $5. So the difference between 1 and 5 means the value per point, which I've shown you in the calculation of P&L just now, right? So the 1 point movement in index is actually worth either 1 Hong Kong dollar or 5 Hong Kong dollar. Okay, so this CFD indices is actually very useful for you when you want to do some hedging or portfolio diversification. Because, for example, let's say you actually bought quite a few companies that is listed on the S&P 500, but you want to actually hedge your position. Let's say, for example, because of because of the interest rate decision by the Fed, or whether Donald Trump is going to be the president and everything. So all of these, you can actually use these CFD indices to hedge your portfolio. Okay, so this also help you spread your risk across different asset classes and geographical regions, because we also provide you access to Japan 225 index. We have Singapore as well. We have Malaysia as well. Okay, so the margin for all of this is as low as 5% for the indices. Okay. Okay, now let's look at FX CFD. So we offer FX trading in the form of CFD as well, where there are actually up to 39 pairs available for trading, because for FX, the value of currencies bought and sold on a daily basis can be up to 1,165.2 billion as of last April 2024. So because FX CFD also operates 24 hours, 5 days a week, because of the global nature and its involvement of quite a lot of financial centers across different time zones. That's why it's 24 hours, 5 days a week. Okay, so here we have our two platforms, which is Poem CFD MT5 and Poems 2. So this is an order ticket for the Euro USD and USD Japan Yen. So this is to actually show you how it looks like, and how FX CFD works is so similar to equities, or just that the spread on Poems will be shown in the middle, which is here, this 0.4. Okay, so same thing, price is bid is the price you sell at, ask is the price you buy it. Okay, simple. Spread for FX, however, is usually measured in pips, which is the smallest price movement that a currency exchange rate can make. Okay, so here we offer the mini lot of 10,000 as compared to the standard lot. As you can see here, our FX here is the mini lot of 10,000, because standard lot for FX normally is 100,000. So the reason why we offer mini lot is because it's actually more affordable to everyone, and those traders who want to use it to hedge to their portfolio, they can actually adjust it to more accurate kind of contracts of CFD, amount of quantity of CFD that they can use to hedge their portfolio. Yeah, so this is why we offer mini lot. Yeah. Okay, now let's see how to trade CFD. Okay, so how to trade CFD? Start. Okay, so technically here, first thing is, what can you use a CFD to trade, which is the first thing is the economic data release. So technically, economic data release is like watching a final moment of a big game. So that's how like the market feels during a major data release. It's actually exciting, nervous, tense, and really unpredictable. Okay, so let's say for example, what are the economic data that we have here? So economic data mainly we use is from the US, because the ripple effect of all these economic data actually has it has a quite huge ripple effects across the world. So what we have is non-farm payroll, NFP, consumer price index, inflation, GDP reports, and then interest rate decisions by the FOMC. Okay, so you can think the data release like a report card of the economy. So when a country gets A score, let's say A score is equivalent to good GDP growth, then the investor would buy a lot of stocks or buy or spend more like technically. So when an economy gets a C or D score, so investor might be worried and start selling stocks. Okay, short selling in a sense. Okay, so let's say for example here US CPI for January that was released in February showing higher than expected inflation figures. So this led to an increase in market volatility because the investors anticipate a potential interest rate hikes by the Fed. So high inflation, which means that the US government will control the inflation by increasing interest rate. So higher interest rate means that there would be higher cost of borrowing. So that's why people will borrow less and spend less overall. So which means that consumption on non-necessity will drop. So there are people who actually use CFD to short sell luxury brands because they know that people are not going to spend as much. Okay, so there's another example, which is last year July. Yeah, so FOMC, when the FOMC meeting released, then many traders actually expected a dovish stand where they were caught off guard by the hawkish tone of the Fed. So there's a need to actually react based on the actual data release rather than you trade on the expectations. Yeah. Okay, so the beauty of CFD is that they actually let you trade like a pro without a hedge fund budget like technically. Okay, so whether it's forex, gold, or indices, you can actually jump in using a small amount of money and take advantage of the leverage that CFD has. Okay, so here for this one now, look at this one for news-driven CFD trading. Okay, we'll explore how breaking news can create opportunity in CFD trading. So now here we have the key news resources, which is company earnings release, like financial reports from Apple, Tesla, geopolitical events, geopolitical updates are basically Russia-Ukraine development or US-China trade talk. So we have also the central bank meeting, Fed, ECB, Bank of England, and Bank of Japan. Okay, so we have different types of news as well. So we have it's being divided into scheduled and unscheduled news. So scheduled means that you would actually know in advance when would it be reported. Because as you know that for company earnings, you would actually know what types of company releasing this week, what companies are releasing next week, and as well as central bank meetings. Okay, so because all this news is actually very important because market reacts to news super fast, like whether it's a central bank meeting or it's geopolitical updates, because news often drives the biggest price movement in the market. Okay, so let's say for example, for earning reports. So last year, Apple second quarter actually showed an increase in revenue, but there's an obvious data showing that iPhone sales is actually dropping. So that's why at that point of time, in the market, there's actually a lot of mixed reaction in stock and those tech-heavy indices. So if you are an iOS fan or you believe that iPhone sales wouldn't drop as much because of Apple having their consistent customer base using iOS, then you can actually use CFD to long Apple and put your view into place technically. So that short-term view that you see, you can actually use CFD to put your view into place. Okay, so let's say for central bank meetings. So last year, September, so the Bank of England, actually ECB actually raised, so no, it's actually England Central Bank raised rates by 0.25%. So the euro actually strengthened at that point of time against quite a lot of currency, especially the USD, where traders actually adjusted the more hawkish stance. So for those that are interested in joining this trend last year, so they actually used FX CFD to get the exposure to the major currencies with minimal cost. Okay, so for unscheduled news, like for geopolitical events, so last year April, there are unexpected US-China trade talks. So because a lot of people thought that US and China are on different sides, correct? But this actually sparked a lot of optimism in the market, which boosted a lot of our Asian index and the Chinese yuan. So you can actually use index CFD as well to trade on this trend. Okay, whereas for natural disaster, so this one is technically okay. So last year there was a hurricane in US which disrupted the oil production in US around August last year. So this actually pushed up the WTI oil prices quite sharply lah. So those who are actually into trading oil can use the US oil CFD to trade on all of these lah. Okay, so these are all the different circumstances that you can use CFD to trade. Okay, right now. So fifth, why trade CFD? Okay, let's keep this short and sweet now. Okay, so this is a summary of why you should trade CFD with us. First thing first, both directions, because CFD allows you to go both long and short. So it depends on what strategy that you use. So you can actually go both long and short lah. Second is use little capital, because our index actually provide as low as 5% margin. So you only need to put up a certain portion of your capital to open and maintain a position now. Okay, so next one is wide range of counters. So we have from indexes to different different markets of stock counters, like we have around 5,000 plus of overall stock counters for you to choose from to trade. Okay, so CFD also allow you to access to leverage, which is around 5 times onwards. So if you need more leverage, you can actually top up sufficient fund and email to us to negotiate your leverage and commission. But of course, this one it depends on the risk committee approval. Okay, so next one would be the competitive spread. So spreads, overall our spreads are actually narrower, which you can refer to our website for different counter, and you can actually even open an account with us first to check it out before you fund in and trade lah. So especially for MT5, then there's a demo account. Okay, so various platforms to trade. We have Poems on website, mobile P3, and then the MT5 desktop and mobile MT5 to trade at your fingertips. So yes, okay. Now, so at Phillip Securities, we offer like equities, commodities, FX, indices to trade in the form of CFD contracts, which are available on different platforms. So now the main thing what I want to present to you is the difference between our Poems 2 and Poems CFD MT5. So here are the different features that we have lah. Okay, first thing first is the commission rate for Poems 2 is standard on our website, but Poems CFD MT5 is lower. So why is it lower? It is actually because MT5 is actually for clients who are more self-serve. So what do I mean by self-serve is they can actually navigate the platform themselves, and they are more of a independent traders. So Poems is it's more, not to say more reliable, but they require more guidance through the platform. So that's why the commission would be more standard, but MT5 will be lower because you do not require as much assistance. Okay, so watch list, both platforms also have to stay up to date to your favorite counter. And then credit limit would be on Poems would be 20,000, but for not 20,000, 200,000 for Poems. Okay, 200,000. But for Poems CFD MT5, there is no credit limit. So technically, if you want more leverage, you can opt for MT5 for those who want more leverage. Okay. Whereas for counters wise, we have more than 5,000 counters on Poems, but MT5 now, as of now, is only around 450. So we are looking to add more counters in the future. So if you have any counters that you're interested in trading, you can also call us and let us know. Okay, for ledger wise, in Poems 2 is multi-ledger. So in Poems is multi-ledger and MT5 is only single. So what do I mean by multi and single? So multi means that we maintain your currency in different ledger. So let's say, for example, you have USD, Japan yen, Sing dollar, Malaysian ringgit. So all of these will be in different ledgers. So technically you have 4 ledgers in this case. But for MT5, it's only single. So single, which means that you do not have different ledger. So you will only have one ledger, which is the Sing dollar. Only one single ledger of Sing dollar would be in your MT5 account. So what do I mean by that is, let's say, for example, you have margin that requires USD, correct? We will only hold the Sing dollar equivalent of the USD needed for you to maintain your position. So we will not convert, we not convert. So we will only convert what? We will only convert your profit or loss. So let's say, for example, you really buy Apple, and then we hold the Sing dollar equivalent of the USD that you have, of the USD margin required lah. Then when you close the contract, let's say you earn 10 USD dollar. We will only convert that 10 USD into Sing dollar and credit into your MT5 account. Okay, so that's why there's the single ledger that we have lah on MT5. Okay, next one will be one-click trading. So one-click trading, we do not have in PoEMs2, only in MT5. So MT5, one-click trading is you click one-click buy and one-click sell, which is one-click lah. Because in PoEMs is you click buy, you have to key in your password and everything. But for MT5, if you MT5, you need to enable this feature. If you do not enable, same thing, they will require your confirmation before you buy. Okay, so because this one-click trading, a lot of traders use it for scalping, technically day trading lah. Yeah. So whereas for advanced orders, PoEMs2 is the standard one. PoEMs, CFD, MT5 have more, which you can open the demo account. So H mode, same thing. PoEMs do not have, but PoEMs, CFD, MT5 have. So technically H mode is allow you to open long and short position at the same time in order for you to like lock profits and anything lah. Okay, so these are the different platform features. Okay, now let's see how do you open a PoEMs CFD account. Okay, so here, let's say for example, so here you need a PoEMs account in order for you to get access to CFD. So for you can use my info to speed up the account opening process. So for those new customers, you can actually create an account via poems.com.sg as well. So for those who are with your phone, you can actually use to scan this QR code to sign up. Okay, so for those with laptop and everything, you can visit our poems.com.sg, and then you would actually be brought to this page, and after that you just click open account. So open an account, and then it will bring you to the next page here on the right side, and then you can actually choose CFD. So step 1, you choose the cash plus. Step 2, choose your facility. So remember to choose CFD and MT5. So MT5 is a direct live account that you have lah. So you need to have the CFD account in order for you to open an MT5 account. So if you want to sign up the demo account, you can actually go to our website and see the MT5 demo account for those who are interested into MT5. Okay. So or alternative, you can actually call your TR or walk into our Phillip Investor Center to open your account. So we have quite a few locations around Singapore, like Raffles City, Ang Mo Kio, Bukit Batok, Bukit Timah, Jurong East or Jurong West, and then Marine Parade, North Point, Marsiling. Yeah, so we have quite a lot of PIC centers around across Singapore that you can actually walk in and know more about all these things. Okay, now, so for our existing clients who already has PoEMs stock account, you can actually log into our PoEMs, and then you can go to the account management, and then you go CFD, and then you go online account opening. So once you go online account opening, you need to complete the CKA and risk fact sheet before you can successfully trade CFD lah. Okay, this is very important, and then you will need to email us the CKA form or CAR form so that we will know that you have completed it and you have passed. Okay, now, so for those, how do you fund your PoEMs CFD account? Is here. So here, once you go onto our website, you can actually see this QR code when you scan, and then you can actually use PayNow to fund into your CFD account. But it's very important that you need to put your 7-digit account number followed by CFD so that we would actually know that whether you are depositing into stock account or directly into CFD account. Okay, so here there are actually links for you to actually watch the tutorial to direct credit your funds into our CFD account. Okay, so you can just click the link on our website there. Okay, yeah. Okay, whereas for internal transfer from stocks to CFD, so if you want to top up your CFD account through stocks or your stocks account, so you can log into your PoEMs account, you go to account management, you go CFD, and then you go online forms, and then you go withdrawal form, and then you need to key in how much you want to transfer, and then you click this to transfer into account. you select your CFD account and then you can type for the purpose of what. Okay, so this is the internal transfer from stocks to CFD. Okay, so lastly, on a side note, there's a limited time welcome promotion that we have. So when you open your CFD account with us for new clients, okay? So you can scan this QR code for more info for you to earn up to $500, okay? So the easiest is you open your CFD account and you make your first trade and you can earn $100. Okay, let's look at the next slide for more info. Here is after you've earned your $100. So subsequent CFD trades, for every subsequent CFD trades, you can get up to $10. So for per day, you can get up to $50. And then for the whole promotional period, you can actually get up to 400. So technically, the total bonus would be 500. So this promotion period is last only from 6th January to 31st. So this in between, whether you want to trade CFD or not, or whether you want to put your short-term views into play, you can use CFD to do so and try it out, test on our platform. So whether it's Poems or MT5, okay, for new clients. Right. So now let's proceed to any Q&A we have. Yep. So let me go to, yes, okay. So yes, there was one question that asked by Michael, right? If you do not own a line asset, how do you get dividends? Yes, very good point. Because CFD is just a contract, you do not own the underlying asset, right? So why do you get dividends? Okay, so why do you get dividends is because, let's say, for example, after the, let's say they announce dividends, let's say on tomorrow. So the day after, normally the price would actually adjust based on the dividends, correct? Let's say, for example, it was 50 cents per share, then it would be adjusted accordingly. So why do we get dividends is because of the adjustment, right? Because when you do not own the underlying, but you will still need to get the dividends because the price would actually adjust according to the dividends that was paid. So which means that we would actually pay the dividends in cash and credit into your account, because the next day the price will fall by the amount, the price would technically adjust to the amount that was being paid as dividends to the shareholders. Yeah. So this is why you would still get dividends as corporate action when you even hold CFD. Yeah. So it's technically not a bonus in a sense because the price would also adjust. It's similarly to holding stocks, but just that you don't get voting rights because you technically don't own. Yeah. So I hope that answers your questions. Yeah. Lim, you raised your hand. Oh yeah, Lim, yeah, you would want to type. Okay, TH Tan asked another question. Which online course to take and pass in order to pass the CKA for CFD? Okay, so that one, there would be a special link on the website to actually see the CKA for so it's actually a special link for you to take the course, and then you will need to pass it. I need to find the link lah. So you can actually search online to pass the CKA link. Yes. So yes, thank you so much. Yep. So let me see. Lim is asking, all CFD margin is fixed? No, different counters have different margin requirements. So that one you need to refer to our product sheet online on our website, or you can actually go to our platform, Poems platform. So once you sign up the CFD contract, you can actually click to every counter which counter has the margin requirements that you want, because technically those higher risk counters will have technically higher margin requirements. So for those like Apple and all, you do not need that much margin requirement. So let me check. But that, so it's not all at 5%. Mostly index are at 5%. Yeah. Okay, so let's say for Apple, it would be around 10%, I remember. Yeah, so Apple will be around 10%. So those that are very popular will be around 10% for CFD counters. So the 5% that you're saying is in index. Okay, next question would be how much time do we have to top up the margin in a situation where our trade is losing? Yes, that's a good question. So, Daniel, for the margin, right? So let's say, for example, you actually received a margin call notification email that you're actually not an email. So technically either your TR inform you or you would actually know because it is actually shown on your account management as well, saying that on that day you would have a margin call. So technically you would have the whole day. So okay, it depends on what the market. So let's say for example for Singapore and Hong Kong market, technically you would have around until before 3 p.m. to top up. So if you do not top up, we would have our dealers to actually force sell your position. Because this is to help you to limit your losses lah, technically, because we do not want you to over loss lah. Okay. Next is okay, next one is actually from Michael, is it? So Michael is saying previously I understand that we have to do CFD on Philip Nova. Now we can do it on poems. Is this correct? Okay, so Philip Nova is actually different than Philip Securities. Although they are under the parent company, same parent company, which is Philip, but it is different because we are being treated as different entities. We are not allowed to being treated as the same entities in a sense. Yeah, so technically Philip Nova is different than Philip Securities, where I know Philip Nova is mainly for futures and not CFD. So if CFD wise, you can actually do it on our poems which is Philip Securities poems. There's another one is, does the government of Singapore require us to do an online course and pass it before we can trade CFD? It's going to complex it and straightforward stock purchase. Yes, correct. Michael, you're right. So for CFD, you have to complete where they call the CKA and CAR and risk fact sheet that you need to know before you can actually trade CFD, because you need to know that you actually not to say well versed with CFD, but actually need to know whether CFD is a product that you can understand and trade with, because there are people might not know what is CFD, but yet they still trade. So in the end they lost quite a lot of money, which they might in the end had a fun call also. So it's actually very dangerous because CFD technically can be a double-edged sword because of the leverage. Yeah, so that's why you would need to complete the CKACAR before you can actually trade. So that is that system itself is a way to prevent people who do not understand CFD to trade CFD lah. Yeah, so that's why we have all these webinar and all these educational articles and videos to teach you all how do you trade CFD property and everything, to actually let you know what is CFD. Yeah. Okay. Thank you, Michael. And then another one is any courses that we can take in order to pass CKA? Yeah. You can actually see the link posted here to learn more about CKA. So there will be a link on the website there to actually know, to actually see and learn about CFD. And then once you pass, then you can actually trade CFD lor. Yeah. Okay, thank you. Thanks, Jermaine, to send. Can explain the concept of leverage again. Okay, so technically leverage, which means that, okay, let's say for example, the most layman term, let's say you have $1. So you have $1, but the position that you want is $10. So technically, how do you get the worth of that $10 position that you have? So you will need a 10 times leverage, correct? So with the 10 times leverage, you can actually opt to buy the position that is worth $10. This is the most layman term that I can explain to you what's leverage. So that's why people with less capital who want to get more exposure to other products, or let's say other counters, then you can actually use leverage for it. So okay, let me give an example for, let's say, Apple. So Apple now is around let's say $200. Let's say Apple is $200, but with us we have 10% margin. So 10% margin, which means that you only need $20 to have one Apple CFD contract, which is worth $200. So that is the power of leverage, that you can have 5 times leverage for you to get that one CFD Apple contract that is worth $200 with a $20 of capital of your own. Yeah. So that's the leverage. Okay. Yep. Thank you all so much for all the questions. So, anyone have any other questions? Okay. Everything looks good. Okay, then. Okay, so thank you everyone, and happy Chinese New Year. Next week will be CNY, and everyone can enjoy your holiday, okay? So thank you everyone. If you have any questions, you can email to us, cfd@phillip.com.sg, and you can call us at 6336 and 4564. Okay, you can take a photo of this, and then yes, thank you so much. Yes, thank you so much, Daniel. Thank you so much, Michael. Yeah, welcome. Okay, thanks everyone. Bye bye. Okay.